Goldman Sachs, one of the world's leading investment banks, recently made a surprising move by discontinuing its branded credit card. The company introduced the card just 2 years ago, but it seems that it failed to gain significant traction in the market. This decision has left many industry experts wondering about the reasons behind Goldman Sachs' move, particularly given the current boom in the credit card industry. In this video, let's explore some of the possible factors that led to Goldman Sachs' decision to abandon its branded credit card and the implications of this move for the bank's overall strategy. So let's begin. According to reports from CNBC, Goldman Sachs has decided to abandon its plan of developing a branded credit card for retail customers. Instead, the decision comes from the firm's strategic pivot, which saw CEO David Solomon pushing for the investment bank to expand beyond its core competencies and serve everyday Americans. Not too long ago, Solomon informed analysts that Goldman Sachs was in the process of creating a card that would have used the platform the bank had developed for its successful Apple Card partnership. The Goldman card would have been one of several products, including a digital checking account, aimed at enhancing the profit margins and loyalty of its retail efforts. However, the ambitious vision to become the primary bank for the masses fell apart after Solomon bowed to pressure to stem losses from its consumer businesses as the U.S. economy faced storm clouds. In October, the bank underwent a corporate overhaul. It split its retail operations, ultimately shutting the Marcus personal loans business and shelving plans for a widely offered checking account. As a result of the pivot away from consumer banking, the rationale for the Goldman card vanished. According to insiders, the decision to ditch the branded credit card reflects Goldman Sachs' efforts to streamline its operations and focus on its core competencies. While the bank originally sought to expand its offerings to retail customers, the recent move indicates a renewed focus on investment banking services. Goldman Cash It. The higher-ups at Goldman Sachs hoped that consumers would clamor for their branded cards. It seemed like a surefire hit, especially since Apple insisted on featuring the Goldman Sachs name on the back of their titanium cards instead of the Marcus brand that Goldman had introduced in 2016. According to an individual familiar with the situation, the expectation was that Goldman could afford to be more selective with approving customers and wouldn't need to share profits with a partner, as they did with Apple. However, the reality was that launching a card under their own banner would be an even more expensive endeavor than partnering with an external brand. Goldman would have to shoulder the costs of acquiring new customers and incentivizing them with attractive rewards. In contrast, credit card behemoths like JP Chase and Citigroup offer a mix of co-branded products with airlines and retailers, and their own proprietary cards. Despite their initial ambitions, Goldman Sachs may have to rethink their strategy if they hope to compete with the established players in the credit card industry. Why the change? Goldman Sachs' decision to abandon its credit card plans, initially proposed in October 2021 to boost profits and customer loyalty in its retail division, was a strategic pivot influenced by economic uncertainty. Like many other banks, Goldman became more cautious in their expansion and customer acquisition plans due to concerns over a potential economic downturn. The bank was also facing mounting losses from its consumer banking brand, Marcus, prompting a complete overhaul of the unit. According to regulatory filings, the business unit that housed the Apple Card and parts of the Marcus brand reported a $1.2 billion loss in the first 9 months of 2022. In addition to financial challenges, Goldman Sachs had to contend with regulatory scrutiny from the Consumer Financial Protection Bureau regarding their credit card business, which included co-branded cards with Apple and General Motors. Combined with internal missteps, continuing to invest in the retail card sector may have seemed futile for the bank. Ultimately, Goldman Sachs' decision to scrap its credit card plans was a strategic move in response to a challenging market landscape and internal pressures. Why does it matter? There were two probable reasons why Goldman Sachs could not become a leading player in this arena. High competition. Despite being a well-known and respected financial institution, Goldman Sachs still faced the challenge of persuading customers to choose its co-branded credit cards over the more established players in the market, such as JP Chase and Bank of America. These larger issuers leveraged existing banking relationships with customers, who were more likely to opt for a card from their current financial provider. In contrast, Goldman Sachs' Marcus platform did not offer to check accounts, a popular consumer service that could have boosted its ability to attract and retain cardholders. Given the already crowded and competitive nature of the credit card industry, Goldman Sachs may have struggled to generate sufficient interest in its offerings to justify the associated costs. Nonetheless, the firm remained committed to building its credit card business and finding ways to differentiate its offerings from its rivals. Management concerns. Goldman Sachs made a bold move into the world of consumer banking back in 2016, during the tenure of then-CEO Lloyd Blankfein. According to sources cited by the New York Times, he was said to have given the fledgling unit a significant degree of independence in terms of both technology and business decision-making. However, when David Solomon took over as CEO in late 2018, he adopted a much more hands-on approach to managing the business and introduced sweeping operational changes. While this shift in leadership style was undoubtedly intended to help drive growth and innovation, it also led to some internal tensions within Goldman Sachs' consumer banking division. Indeed, several senior executives who had played a key role in guiding the firm's early forays into the consumer banking space reportedly departed the company. These departures may have further complicated Goldman's efforts to establish itself as a serious consumer credit card market player when the competition was already intense. Nonetheless, the firm remains committed to its consumer banking ambitions and is no doubt exploring new ways to achieve success in this important area of the financial services industry. What do you think of their strategy to ditch their branded credit card? Comment below and subscribe for more such videos.